Hello, hello, hello. Hope everyone's good. Happy Friday. Hopefully you've all had a good session. Let me know what's good. Kyle, how's it going, buddy? What is occurring? Dude, how's your session been? How was yesterday for you? I didn't stream yesterday actually. I kind of just did the same. Did the same today. Oh gosh. Treasuries was that bad yesterday. I fell asleep. I was like, I'll go and have a break, and then I ended up falling asleep. I should have did the same today. The last 3 days, Wednesday, Thursday, and today, I've been scratch every day. It has been shocking action. Since the job reports came out yesterday, the market didn't really move. And today's action, I don't know if you've checked it, we'll run over it so you guys can have a look. But yeah, I think it's been in 10 years, been in something like a 12 tick range since open. The last two sessions, basically the movement has been an overnight, which obviously I don't trade. But yeah, we've done a lot of sweeping today. Sweep down here, sweep of overnight high here, just happened. So hopefully you guys had a good week. This one's been crazy. Nick, how's it going? Yeah, I mean it's been interesting week. I think some people have had really good weeks. Some have had absolutely shocking weeks. So hopefully you're in the good week camp. We'll actually run over the week. It's going to trigger me that that's not to the right. There we go. So let's run over the profile for the week. Okay, so Sunday Open, we just absolutely tanked and we left this gap. Monday, everyone was like the world is going to blow up. There was limit downs in the Nikkei. I think the Nasdaq nearly hit limit down. This is of course ES you're looking at. Um, so Monday was a real scare day. Then Tuesday, I think it was overnight session that we went extremely bid on, if I remember correctly. Had some recovery. It was either one of those days, but then we've essentially filled the gap here. Now we're ranging around. So if buyers do manage to reclaim here, they probably need to break. I'll just draw this here. They need to reclaim this level for this just to be counted as an essence a pullback. But until we reclaim this, with the current volatility, it's not going to be that difficult for price to come down here. Now, bear with me a little second. I just bring up the pen. Here we can run over what we're seeing. Okay, so let me just full screen this again so we can have a look at it. So just so everyone's aware of what you're seeing, this is the regular trading hours. I only have the Globex or extended trading hours for the current day's session, which you're seeing here. So I've split that into its own profile. So we left this gap. This was the close on Friday. Market basically opened and we absolutely tanked. We then continued that on the Monday, put in this low, and then we essentially went bid. We then filled the gap, which is here. Okay, we then sold off on the Thursday as well, and then now we're just consolidating around here. So with the current volatility, I've just noticed that's not turning off. With the current volatility, it's not going to be that difficult for price to get down here. So buyers are certainly not in the clear until they reclaim this level up here. They need to reclaim and hold here, and if I drag price up, you can see that this is the a real big high volume node here, so price should be returning back up here, but it really depends. If these mag 7s don't perform, then it's not going to be very long until we're back down testing these levels. And if we do break here, this is when papers fly, everyone starts getting scared, the world goes to pop. So yeah, that's what's basically happened since you've been away. Treasuries had quite an interesting week. I can pretty much tell you exactly how that's worked without looking. So in essence, Friday and Monday we had a huge bid, and just when the ES was selling off, Treasuries went bid. But then in essence, we sold off pretty much for the rest of the week with a little bit of a bid towards to this session to basically close off the week, which has happened in overnight, sadly. All eyes were on the job report numbers that came in basically not as bad as expected. So in essence, bonds sold off and the ES went bid with that news, because obviously the market was hating the bad NFP and the slowing labour market. So there you are, quick rundown. Yeah, so the carry trade, bit of pressure been put on there as well. But in essence, the sentiment at the start of the week was, it didn't really help that Warren Buffett or Berkshire Hathaway had basically sold a lot of their equities, putting a little bit more fear into the public as well. And he essentially put his money into bonds and notes. So we saw a bid there, plus with the bad NFP numbers that come out, and of course the Mag 7's not been performing. Then you had some of the the yen unwinding as well. So really, I need to check what data is coming out, but the main numbers the Fed are watching, of course, are the job numbers. So we need to see what's coming out. But right now, until the next data point comes out, I think we're just going to be pretty much ranging, to be honest with you. And of course, if the Mag 7s do bleed, then it can get quite ugly. Oh, sorry about that, Josh. How's it going, dude? So you found the stream by typing in how to read the DOM. I'm a novice to OrderFlow. Do you have any video, series / course you can recommend to learn OrderFlow? Been trading for 2 years using basic price action. Well, mate, you're just in luck. In the description of this video, I have a specific series developed for exactly that question. Marky boy, how's it going? So there you go, Josh. Here's a link to it. There's hours and hours of free content there to cover everything on OrderFlow, from Delta, how to spot trap traders, what it takes to be profitable, the competition you're up against, how to actually read the DOM, how to properly draw out your key levels such as support and resistance. There's tons and tons of stuff in there. And there's also, of course, some order flow trade examples, both on ES and on Treasuries, depending on the markets that you trade, dude. No problem, matey. If you've got any questions, feel free to leave any comments in the video. I don't have any I don't sell any courses or anything, as I find it, I don't know. I find courses, if you really want to learn, you can, the one thing is the stuff online you can learn, right? The trouble is with OrderFlow, if I'm going to be completely honest with you, which is the premise for creating this channel, is a lot of the stuff on YouTube is extremely outdated. You've got the likes of John Grady's a great resource, but his stuff is like 8 years old. The market is in completely different cycles now, but the concepts are still pretty much the same. And then there's not really that much great content, to be honest with you. So that was the premise for creating the channel, because in essence, to have this is my opinion. Obviously, a lot of people, would disagree with this, but in my opinion is to have longevity in this game, you need to understand the true nature of buyers and sellers that are coming into the market. Everything else, you're just going to have good and bad spells, and there's just an element of luck with it, to be honest with you. So let me know if you've got any questions about that. Focus on prepping for next week. Yeah, exactly. But we need to see what data comes out. Like I was saying, I don't think we're going to go higher this session. I mean, this is just screaming balance. I feel that we just basically fill out. That's a bit much. I feel that we just head our way back down to the POC, down here, and we just sort of do this. We'll maybe give a little bit of a sweep here, or potentially, a sweep here for market on close. If we do sweep the high, we'll maybe finish here. If we sweep this low, then we'll finish at POC. That's pretty much what I think is going to happen. The reason being, if there was to be any form of breakouts, they would have happened. And sadly, there has been, to be honest with you, just no volume today at all. I think if you guys go and check the volume versus, well, specifically on treasuries, there was so many contracts traded yesterday, and today the volume has been garbage. Josh, no, never dabble in order flow crypto. No, I've not. The reason being is not a centralized book. Just, yeah, not a centralized book, to be honest with you. You need, in order to even make that possible, you would need to know the volume that's coming in. I'm assuming you're only trading Bitcoin, right? There's no point trading any other, maybe Ethereum at a push. But you need to know the volume that's coming in from Binance, HitBTC, Kraken, Huobi, or whatever that Asia exchange, Coinbase, of course. So you need to know of all of that together, because if you're just getting Binance, then there may be a huge order sitting on Coinbase or whatever. So yeah, the reason why I'm saying that is futures is a centralized book, so it doesn't matter where you are in the world, you should have something very, very similar to this on the screen. Yeah, exactly, Mark. I mean, I think if I'm going to basically watch the price action closely next week, and if it continues the way it is, I won't be trading. It's the honestly, there is no point. Maybe on ES, right? But then your ES, I suppose, fair enough. But if you guys look at treasuries today, okay, let me just bring this up. Give me a second here. Okay, so notice how we're kind of out of whack at the moment as well. So this is the session today, right? This is the session. I've also got up here a footprint as well. We're gonna do a video about this, by the way, as well, just to see. I don't normally utilize this. I have it on another screen, but on really slow days like this, where I can keep it quite compact, it's not too bad. So overnight session, we went bid. This is what you're seeing here. This is the close. We then went bid, okay, and then I think we opened We opened here. This is the whole session. We've literally extended the low here in the last couple of hours. It would literally extend when I'm not trading it. But if you look at the volume on here, I'm going to make this a little bit bigger so you can see the volume here. So there's been 106k, 114k. The volume is more than 50% less than yesterday. And it's literally just been in this range since open. And this is what it's been doing continuously. It's hitting into the bid. We're seeing a couple of ticks extension, then the offer is pulled, then we're just faffing around. And the reason why this is not going to continue is because the 30-year is not even probing the lows. So in essence, what we'll probably see here is the 10-year will probably pull back in, and we're going to finish probably evens. It's pretty much going to be the case. For this to be smashing down, A, there needs to be volume, and B, there needs to be the treasuries need to be in sync with each other. So this action is shocking. I mean, this is some of the worst action I've seen. So if it does continue, then I probably won't be trading, to be honest. Hello, trader boy. Hello. No problem, Josh. Yeah, I mean, I was expecting, so we went super bid, and I was thinking, right, I want to probably be a buyer at like 28.5, 28 when it pulls back. We've got a little step in the profile here on the weekly. Buyers are likely, step up and defend here, and then we might get a nice continuation and break of the high to extend to the full ATR on the session, right? That was my play. That went completely out the window when the first hour and a half we literally were in a 7-tick range. And I can't explain to you how frustrating it is when you're watching a market waiting to go for an hour plus and it moves like 4 ticks. It's infuriating. So I ended up scratched today. I ended up, I took this low. So you can see they're absolutely drilling into this here. So this is what you should be expecting. They're drilling into it. They should be taking this price and then reloading the offer. Right? But you can see that they're not. You want to see the 30-year basically hit into this bid, clear it, and then reload the offer. So this is the problem with what's happening. If this was normal volume, this would be cleared, offer would be reloaded, and we would then be ticking down. This 4K would be pulling. So it's 4.1k on there. They should take this price, and then 2k here should just cancel. Right? Let's see if they do it just to explain this. You can see we're trying on the 5s. The 5s has actually been better price action today. It's a shame I don't ever trade the 5-year. You can see it's just moved. It's moved way more. So someone right now is stepping up at the low of session or the low of regular trading hours and absorbing 4,000 contracts. So most likely that is people getting out of their short positions, because I can't imagine anyone's going in for fresh longs at this time. What did you trade today, Rob? What did you trade? Did you trade the Ultra? Yeah, complete zigzag. I want to know what you traded me, unless I found today. I think at one point I was up 5 ticks on the 10s. Relatively good session, right, for what it was. I had to absolutely battle my heart out to get those 5 ticks, mind you. And I basically tried a couple of hits of the lows been probed, trying to target like 28s. So I think I was short ones or halves here, and then we just ended up going back up to like 2.5, so I had to puke. Okay. Nice. Wow, Rob. Hopefully you're feeling better, dude. Yeah, that's the thing. I think, to be honest with you, in hindsight, I was up five, and then but the fact that we were probing, like there was just so much absorption in the offer, right? It was just tons of absorption on the offer. So I was thinking, right, we're going to crack these lows, and I tried it a few times and took a few ticks, stop. So I ended the day with a tick. Shouldn't have bothered, to be honest. After commissions and stuff, it's just a scratch. So anyway, you guys are not really going to want to watch this. We'll jump back into indices. And you can see right now, in order for this to continue going down, I would expect the 30s to be probing down here. So, I mean, that could move pretty quickly, but yeah, yeah, I gave back four ticks, which I was pissed off at. I think, to be honest, mate, I should have probably traded the 30s. To be honest, the last couple of sessions, just trading tens has been rough. Like it's just not been doing anything. So yeah, capital preservation and all that could be worse. Could have done Morrison, but yeah, one beastie. That's a very Scottish term. That I think that's what we're going to call it. A beastie from now on. Beastie's another word for an insect. Yeah, it was just really, really slow, wasn't it? Extremely slow. Yeah. Hey JK, how's it going, dude? I usually go for seven worms. Nice. So we'll see what this is going to do. This has actually been quite a good sweep here. But sadly we're back in value. Quite a capitulation of Delta as well. You can actually see today that Delta has literally been following price. Do you see that? So the market's going up, then there's a slight pullback, pulls back, then it goes up, then we have a pullback, then it goes up, then a pullback. Quite an honest day in terms of Delta on ES. It's not normally as clear cut as that. I suspect the volumes will be pretty bad this month, to be honest. Considering holidays, this is the month where holidays are so frequent, right? So let me know if you get any other questions. What do you guys think we're going to do for the session? Do you think we're going to break any lows or highs here? It's happening in September meeting. He might do an emergency cut, but I'm willing to see if that's going to happen. Nice, Kyle. You never trade away from POC. Do you mean you specifically like to fade back into it? Nice. Yeah, I don't really ever trade NQ, to be honest with you, dude. One of those markets at the moment where you're just slapping on like 2 or 3 micros or something and just letting it go in a million ticks. I think we'll go test the highs and then in fair value. Nice one. Yeah, I think so. I'm hoping we don't just, low volume it for the next hour, to be honest, which I can kind of see happening. But yeah, we're now attempting to close below previous day high and initial balance high. So I think if we get down to POC, but we'll see if sellers. I don't think no one's really going to step in and bang it at this time, to be honest. Yeah, Kyle, I would agree with that. I would say you need to take a couple of things into consideration. There needs to have been enough volume to make it a significant POC. You need to obviously be aware that the POC can change. But yeah, no, the reasoning, if not POC, round about that area, of course, or back to the next sort of higher volume node for the session or previous days. But yeah, no, that makes sense. ES is, it's a really mean reverting market, to be honest. It loves to sweep levels, and especially in balanced days, they have to make a market, so they take price to liquidity points, sweep it, and then take it back into value. But the reasoning is good there, mate. I would say that yeah, just be cautious of enough volume being traded to make it a significant POC, if that makes sense. No problem. Yeah, and I would never enter at a POC either from there. Like, that's normally going to be your target. Yeah, Pike, it'll be interesting to see if the Fed how much they cut by, to be honest. The market's certainly pricing in the cuts and treasuries anyway, that's for sure. That's what I was thinking as well, Rob. I mean, I was really hoping that after we filled in those single prints on Wednesday, I can't remember what day that was, but anyway, I was hoping once we filled in the single prints that we are just going to go bid, to be honest. It would have been really simple. Yes. Well, not always, but very typically you're going to get a. Well, put it this way: price is never going to go through. Well, I'll caveat that. Um, in a normal balanced day, price is never going to go through POC without chopping. You're normally gonna have orders sling off, take profits happen, just two-way trades, because it's a thicker area. So you know it's never just gonna go straight through there. So it's a good area to potentially, like, say you were selling this. I'm just spitballing here, right? So for me, if you were fading this and say, let me get the pen. So this is just general idea of how volume profile works. So when this was coming up to the overnight high, which you can see here, the market swept it. This is a balanced day, so your premise is that we're not going to be blasting. Also, as we discussed, there's a gap up here that's not likely going to be filled in a Friday with no news, or break above it. So we swept a high, you're then taking a short back in. Without looking at volume profile, you've then got a congestion point at this high, which is the previous day high, and also it's a higher volume node here that you can see, and the market is going to bounce off high volume nodes. So if it did, just say blast right through here, right, you're not going to get down to this area here, right, without there being some profit taking, chopperoo, for example. So what I would probably expect, something along the lines, is if the market did this, it would come down to like here. You would do something along these lines. Then you'd maybe sweep here, and then sort of come back in and then do something like this. So you would sweep this low here, and then come back in. That's the sort of typical flow you'd expect. But right now, the next inflection point, which is this higher volume node, you're obviously seeing the market react off it, and that's just very standard of how it does it. So the reason for me saying that is, um, if you were short from here, you've already got the market should not be breaking this high again if your thesis is correct, where it's coming down the way. So you've had a really good return here. Okay, you can get out, and then if it comes back up and gives you another potential entry, like say we hold here, then you can take it again. You know, just in general. Especially this only works in balance days, by the way. As we discussed, if you're one time framing with no pullbacks, where it was just doing this, you know, this type of stuff, where it's just going completely straight up the way, and there's a lot more volume, I don't recommend doing these types of fades. What do you mean if it's good to hold as such? Do you mean, well, see, this is the trouble, is entering off this. I mean, you could of course get a little bounce like this, right? But normally when it gets to these areas, this is just from years of looking at it, it normally doesn't just, you know, it just barcodes round about here because it can get tons of two-way trade-off. So you'll probably find if this does go back up here, somewhere here, they'll probably sell back down, then you'll do a little bit more barcode, and then it maybe go back down to POC. Or if this is to be respected, this will become the new POC. This node here will become the new POC because we're not far off it. You can see from it becoming the point of control, so it'll potentially shift higher. Yeah, so you're meaning if you were short here and then you're looking to take profits here and then basically buy the bid back up is what you're meaning. Right. Well, I mean, to be honest, if you caught this fade, I mean, this is like and your stop should be above here. This is a good trade. From here to you're talking, 2, 3 R there. Hey, JK, I'm not sure, dude. I wasn't paying attention. Um, I can see that there's just the market's pretty flat right now. See, there's not really much delta coming in for this movement. So it looks like the offer has just been pulled to essentially take the market up, but that's to be expected. You know, there's not going to, especially in ES at this time of day. Yeah, exactly, exactly. That makes sense. It's quite a key area, of course, with it being the initial balance high, previous day high, and a high volume node. So if you did have absorption there, it'd be nice if I probably paid attention to that. But just want to see what's the total contracts for POC. 10k. So it's not a lot at all. So by the time this is market on close, this level here is most likely gonna become the new point of control. It's only a couple of thousand contracts away, not even like 1.5k or something. So I suppose this will be a chatting stream, so let me know if you've got any questions because I can't see anything ridiculously exciting happening. VWAP's also grinding higher as well. You can see there those orders on the MBO data here. Let's see if they're going to be filled. That was filled. Let's see if this is as well. Wow, they're not been pulled. That's impressive. So you can see here that 272 contracts absorbed here. Continue refreshing. See if we're going to hit it. They've also got some support here with this guy. 336. It's a nice little sneaky iceberg in there. They break it. Always when an iceberg like that breaks, you typically get some movement through it. This bid has just been pulled aggressively here. Absolutely no buying on the way down there. Do you see that? 4, 4, 14, 11, 31. You know, only 34 contracts, 28 was hitting. So just no buying, to be honest. Just the bid completely disappeared to get us down like 6-7 ticks here. That's typical in your low volume setup, and then as soon as a buyer then steps in, you know, and the offer is pulled, then you're back up 6-7 ticks. Oh, the range algo, Rob. I don't think. I need to have a look. I've got my MBO data set for that, unless I've got it set too high. But it's not even that high. It's a couple hundred contracts. I didn't really see too much in terms of large clips. Yeah. The 5-year actually has had a better range the last couple of days, but let's be serious. You know, 5-year tick to commission ratio is not very good. Kind of defeats the purpose ever so slightly. You need to be hitting that thing for like 20 contracts. Yeah. Yeah, I'm with you, mate. And the thing is with that as well is it's not even any real size. If you noticed a lot in bonds, they'll how to explain this? I need to go to it and explain it. Give me a second here. Would you look at that? We've pulled right back in. Surprise, surprise. So that's actually happening here right now. So what they'll do, I don't know if you noticed this or if you use MBO, mate, but they do this a lot. So how to explain this? So say for example, you know, they're trading 200 into 30s, right? And then there's maybe, I don't know, 2,000 on the offer, right? So they'll trade 200 in, then they'll lift the whole offer, and then they'll print a clip on the MBO like this. Normally 1,000 contracts or so. They'll do it on the tens, and it's not really real, but they do it really quick. So they'll hit in, and then they'll lift the offer and take it, and then while they're doing that, they're then basically flashing the bid with some size below it, and then if it goes back down, they then pull. They do that quite a lot. This has been here all day, so is these as well. This 1380's never been filled. I was thinking when this appeared, I was like, great, we're going to maybe go down here a little bit, and then we can get a bid and fill this up and potentially hit the 1 ATR level for the session. That would have been great. I think the bid is just thickened up here. Bid and offer is just thickened up, unless I've not been paying attention. But yeah, it definitely has in the last hour. But does that make sense what I was saying there, Rob? Pike. Yeah, exactly. I like it. Yeah, exactly. They do that a lot, mate. And I think they're basically just doing it to check. Um, I think they're doing it to basically test how strong the offer is on the next price. Because you notice this a lot, mate. Where, let me go back to this again. These conditions suck, to be honest with you. But you'll notice they do this a lot where, and this is when I know it's really shitty action. So the market's like this, it's gone offered, right? But then they'll tick like this, they tick 12 in, or they'll tick literally 1 in to test the bid. So, a lot of the time, if this is to be going down, they'll press in here and like 2k will cancel. They'll then take the full amount, reload the offer. The same happens here, the 7k bid. So it's nice that this is happening. So they take that, reload the offer, press in, and then we see this pulled. So nothing has been pulled yet. They've ticked 10 in, but they do this a lot. They'll tick in 1, see how strong the bid is, and then a lot of the time they'll just completely lift the offer, and then the two-way trade. It's when the action's garbage it does that. But you notice they do that a lot, right? Because that's the whole point. Is they need to check if these bids below are actually fake, and that's when you're trying to anticipate that if these are going to be pulled, and there is actually some size that comes in, it turns into a sweet trade. Hopefully that makes sense. It's harder to spot on ES, of course, but what I've just described is happening in mega speed time on ES. You just can't see it because it's much thinner these days. When it was like 400 bid and stuff, or much thicker, you'd be able to see exactly what we're discussing right now. So like there, they've just done it there on the 30 year. So they take one out, then they print an MBO at a decent size order, they tick up, 310's pulled, and then they want to see if they clip it down or not. So they do, so they clip it and then they just pulled that order. They do that a lot. We're just discussing the different flows here. None of this is tradable, by the way. None of this. I mean, look at this range, it's absolute garbage. Unless you basically stepped up and faded the high and caught something, and I think there was maybe a chance where you could have got the extensioner low here once, but I struggle with this. I've not checked UB today, but the ranges are normally bigger in the ultra. 5 year, look at the fives. The fives has been much nicer of a range. This is the regular trading hours, by the way, you're looking at. There's the overnight high, and then the overnight low is down here. I love that, Rob. Yeah, exactly. Or maybe take that as a good film. What's Limitless? You seen that film? You take the drug or something, and, and the guy just does all the stuff with stocks. If only it was that simple, we'd all be on that. NZT, is that what it is? Yeah. If only that was the case. But what I was describing there with treasuries, like when it does that behavior and it goes, it's the most readable thing. It's just extremely readable and predictable when it's doing that. So you're anticipating that some of the bids below are going to be fake. There's some selling delta coming in, and you can see that bids are starting to be pulled. You can either join the queue or get in the next price when they take it, and then they just gradually tick in and start pulling bids. The correlations work in your favor across the curve, and Bob's your uncle, Fanny's your aunt. Easy stuff. It's when you don't do any follow through movement and you have days where it's on like 8 to 10 tick range that you want to blow your brains out. Yeah, exactly. Yeah, some of those Wall Street bet losses are hilarious, man. Yeah, if only it was that simple. Here's actually a question for you guys. Um, Type a Y in the chat for me if you trade Globex or extended trading hours for any markets that you trade. And let me know if it's Treasuries or ES as well, or NQ. I'm interested to know how many of you guys actually trade Globex. Oh, you do? Trade the 30s, my cute. This is just complete barcode in the ES right now. That's what I was fearing. Oh, Nico. Nico. A bit of boon in Euro stocks. Fucking right, dude. Nice, Rob. Yeah, there's quite good volume round about London Open, what tends to pick up a little bit. She's saying that this week has been quite good volume on the volume's actually, well, I won't say volume. The movement has been better in Globex. (9 p.m. to 1 a.m. then break. Back at it 5 a.m. Nice, Maku. I've got no idea what times that is in relation to me, but nice. 'The volume is this is the thing. What I don't like about Globex, or just when the regular trading hours is not open, is when you see weeks like this where you get movement, right? And pretty much if you look at the delta or you watch the DOM, there's not really that much size going through. It's just the offer or the bid, whatever direction it's going, it's just not there. So there's no fighting back, or the offer or bid has just been pulled. And it's great when it's got movement, but it's not so much on weeks where there's no movement and you end up just having a session like today's been in the regular trading hours. I kind of think it's it swings and roundabouts. Do you know what I mean? Yeah, I agree with that. My location, UK. Yeah, it's crazy, crazy pike. I kind of think they might as well just put the money on red at that rate. Yeah, it's completely different style. That's the thing. Like I actually would probably prefer to trade. Hmm. I'd probably prefer to trade ES in Globex just because ES loves to sweep highs and lows and sort of the previous day high or a sort of decent sort of swing point that's put in and then just mean revert. It loves to do that. When you have days like I think it was Tuesday or Wednesday this week, where we just went straight line bids. That is normally a red herring, whereas Treasuries doesn't tend to do the same. It's a different market. It doesn't run like a number of ticks and then sweep back like that as much. I tend to think if it breaks something, it will tend to go that little bit more if it's sustained. Sorry, Pike. Globex is just so you have the regular trading hours is classified as the cash session. And the cash session is pretty much when all the money flows through. Um, every different market has its slightly different hours, but majority of the markets in CME Group are opening at 9:30 a.m. New York time. Bond market opens an hour earlier, um, and you see the most volume from then up until 4 p.m. Uh, New York time, and then from 4 p.m. Well, the market closes at 5, but we'll just call it from 5 p.m. up until the next 9:30 a.m. is technically the extended trading hours or Globex, where it's pre-market as such as you want to call it, or it's where you want to cut it, and the market moves, but there's not any real. There's still volume there. There's still things buying and selling, but there's not. There's a fraction of the actual volume that takes place in regular trading hours. So that's very typically well you'll see a lot of moves. Time would that be your end? That would be like 3:30 p.m. Yeah, 3:30 p.m. your time. You'll start to see everything popping, probably on oil. I can't remember if oil's an hour earlier or not. Cash open. I don't really trade that market. Nice one, Maku. Yeah, the thing is, I think you need to basically pick a session and 'cause this is just if you can trade both sessions, more power to you. I just think it's a slightly different strategy that you need to operate for each. Like RTH session, you're probably going to get more breakouts, more continuation, typically. Um, and the market's going to start moving just that little bit quicker um, through levels. Whereas maybe mean reverting strategies are going to work that little bit more in in extended trading hours. Rosie, how would anyone analyze when bids are being pulled, for example, on the bid and then quickly being added onto the offer? So in essence, I'm gonna go to Treasuries to explain this, right? Let me explain what I mean here. Okay, so this is a nice example because we're here. Oh, there's a lot of selling that's just come in here. Jeez, oh, is it Delta, right? Okay, wow, they're really hitting it here. Trust this to happen, now. This is the type of move that you would, kind of be wanting. But anyway, so what you need to be anticipating, right, is all of these bids. So every price in this day and age, sadly, they don't give it to you like candy anymore, right? Every price, and I can extend this, but every price is probably going to have 4K all the way down. These won't be real. Market makers are layering quotes in every price. They're doing it in every market, every single market, and they do this to make the bid and offer appear strong, right? So that everything almost appears indifferent, right? Because if you think about this, if the market was truly to go down, right, and they just pulled all their bids, well, everyone would start selling, so they can't do that. Do you know what I mean? They need to make a market, and they don't want to give away their hand, so they need to create this synthetic illusion that everything is indifferent and it's the same, and you need, as a trader, to anticipate where are you in the session, where likely are certain positions and players that have executed trades so far, where are they going to be under pressure, where do they need to liquidate, and then you go with that direction. So like right now, you can see that there's a number of selling started to come in. The three markets are ticking down. Okay, what you want to be seeing is right now this is good. So that there's 5.5k just traded into the offer. The offer is staying strong, but you would want to see them hit into the bid. Say they hit in a couple of thousand. You don't want to see them ticking in like 44 contracts. That's garbage. You want to see them hit it with some conviction, like hit 2k in, and then the others just cancel. Then they reload the offer strong, and you also want to see that happening across the board, right? But you need to anticipate that if sellers do come in and hit this and then reload the offer, 2k here will probably cancel, right? And then this will probably change as well. You can see that 500 is already pulled, and so is 463. But there's no real conviction right now because there's trading 45 into this. If they hit 2k into this, and that's what they've just done. So only 45's taken there. They then lifted the full offer and reloaded the bid. So it's probably going to be a bit of two-way here. And then they'll restack. Yeah. Okay, and then if they're only ticking 44 contracts into the bid, there's not really that, it's not really that much selling going in, is there? They need to start hitting this with some size to break the level. And if they just sit here and don't do anything, then the buyers are just going to take it back into value. Take it back in 3-4 ticks. So your job, you need to anticipate. There needs to be volume. There needs to be stuff happening so that the market can bang through a level. Because whatever way we cut it here, we're slinging 10 contracts or whatever, right? These things need thousands of contracts to move. So you need when you get in a trade, you need other people to bang it with you, or be on the right page. And they'll layer these quotes in any market you watch this day and age. This is how the market is now changed. And it's your job as a trader to anticipate that these offers or bids is going to be pulled depending on what the context so far of the session is. Hopefully that makes sense. Yeah, Steve. After today's session, I was so tired after today's session. Um, it's trading is tiring. I find it like mentally exhausting. To be honest with you. Um, Especially when you're like analyzing numbers all the time, you're checking stuff, you're listening to wires, you're doing that for like 3 4 hours. It's anyone that says this is the thing when you get into the trenches of trading. Anyone that brings out a laptop and places a trade on TradingView with that stupid risk to reward red and green thing and goes to the beach, it's bullshit. So that was quite a long explanation of that, Rosie, but hopefully that made sense. Yeah, they definitely. I mean, every single market. The reason why markets take levels is because regardless of the market there, the big players need to take it to levels where the stops are so that they can get out of their so they can get out. That's just how liquidity is provided in the market. That's how people get in and out of trades. Rob, you get screwed in all sessions. I think it's you either like slower or thicker markets or you like the quick ones. Yeah, you need to be a madman to be trading NQ. Oh, the cracker. Yeah, I really want to see if this is gonna go. I highly doubt it. So like this type of action, right? The free market's here at the low. I need to probably bring up the ultra, but I wouldn't be surprised it's not going to be far off it. You know, you've got three markets just about to probe the low of regular trading hours, right? We can see that there was tons of buying above the highs, so these guys are going to need to start recovering pretty soon. But sadly, there's just no volume. If they could give me this setup, right, at the open, like great, you know, great. That works. I'm not gonna say every time, but it works a lot. This is the type of scenario you're wanting. Some aggressive selling coming in. The bid is weak. You've got correlations in your favor. Overnight session is pretty net long. They're hitting it. You know what I mean? Just different conditions. But then sadly, just because this appears like an hour before close or whatever, doesn't they're not going to take it. Because most likely they can pull this offer at any minute and you're up 2 ticks or you're off 2 ticks. God, you guys are fantastic with analogies. Oh, that's a great one, Maki. It's great. Hey, dude, how's it going? Lumen, how's it going, my man? What is happening? How's your Friday been? Rob. Uh, guys. Oh, look at that. We're going bid. We're going for the sweeperoo. I think it was Trader Boy that said that. All eyes. It's time for the rectangle. Let's get that out. Time for a sweeperoo with the initial balance extension line up there as well. Also, we've got the gap. Whereabouts was the gap again? Let's. That's quite a ways away, isn't it? Well, this is the gap here actually. So again, this is where you kind of need to use your noggin a little bit. You guys are not gonna know what that means. You need to use your head. So Friday, no data, nothing really to happen. The most probable setup is, as we discussed, the market reclaims here, then the buyers are basically back on, right? So most likely sellers are not going to let that happen. So if they do sweep here, then sellers are going to be protecting, but then also the buyers are most likely going to want to liquidate their positions up at these levels, because the chances of this smashing past the initial balance extension line and going past that is not that likely, to be honest, on a Friday. So you will have people that will be buying this thinking this is going to go to the moon. Yeah, it's a cracker, okay. But most probable when you get this sweep, you're just going to return back into value. And the reason being is time of day, lack of volume. This is a key level. It's just improbable that it's going to happen at Friday at this time. And to top it off, you're kind of getting away from standard deviations where, algorithms are probably going to be banging this back into the mean. If it even gets that far. Exactly, Rosie. That's the thing is, every market has its own tendencies, despite the the general concepts being the same thing. Every market has its own tendencies, to be honest. And what I mean by that is volume at certain times, how much they sweep it, do they like to sweep it and revert back, how do they hold for breakouts, how big are the ranges, how thick's the book, how do they pull bidding offers, you know. Every market has its own little quirk, to be honest. That's why when people start trading, everyone for some reason just seems to go to NQ. Well, a lot of you guys don't, but majority of people when they get into trading, they start with NQ. I don't know why, but they do, probably because it moves the quickest. And they end up having a really hard time. The irony is, I don't know of any long-standing traders that actually trade NQ. It's one of those markets that if I was to ever trade it, I would probably buy and hold with no leverage, to be honest. But when you start, you need to try out different markets, realize which one you like. Some may work for you better than others. Some may allow you to adhere to your rules better and your process and procedure. You just need to experiment, Good luck, Pikey boy. I wouldn't like to see it reclaim above overnight high, which is like above 75. I wouldn't like to see it get above there. We need to break the initial balance high and break previous day high. I think most likely we're going to chop a roo around here, to be honest. A little bit of stir fry. Exactly, McCoo. That's a good way to put it, dude. And I think this is why it's really, trading is so hard, because you know I can recommend certain things for some people, but then the stuff I'm recommending, um, may not work. It's kind of like dieting. Do you know what I mean? I recommend certain food types and certain workouts that you maybe not enjoy. And the whole point of dieting is to adhere to the process and plan, because the longer you adhere to it, the more likely you are to follow through. Same with trading. And trading is, if you have a market that you can control risk in, adhere to the process, you're more likely to stay in the game. So you need to get proficient at it. Yeah, Lumen, nicely done, dude. What parts did you incorporate? I'm actually intrigued to hear. Um, what parts did you incorporate from the videos, and how did you combine it with ICT in order to have a good week? Yeah, hopefully don't get above overnight high, or it's goes above the high, average in and pray. Maybe, but I think we'll just balance around here, man. Market on close. We've got volume coming in 23 minutes. Yeah, I'm glad you had a good week, dude. Also, Lumen, have you watched the ICT webinar this week? I checked out for 10 minutes. I wanted to see what he was saying when the job numbers come out. Uh, so I went on to the time. I can't remember what day that was, Wednesday or something. And he's got more terminology in there now, man. He's got things like convulsion blocks, or you know, I don't know, convulsion blocks or something, some ridiculous name. Um, when you're trading those concepts, do you not? I don't know. It just seems really so many different terms in there. Rather than just calling a sweep, it's called something completely different. I hope it goes well, dude. I mean, I don't know. I've got really no idea as to where it's going to go, to be honest. Apart from where it is right now. Until the volume comes in. Yeah, see, I mean, that's even neutral. So basically all of this negative delta, we're flat on delta as well. It's not like it's really overextended, so no one really needs to liquidate. This selling off has been profit taking around here for a little bit of distribution. The market's going up with no real delta right now, so the offer is being pulled. So you're going to need some fresh selling to come in order to drive this down. Same thing as buying going up, you're going to need some fresh buying coming in. I don't know if there's anything really fresh. The only thing that's going to happen is in the next 20 minutes there's going to be some balancing that comes in, which may take the market one way or another to see. Okay. Okay, dude. So what parts did you incorporate from the videos? Is it just everything? I mean that's kind of a broad term, but you know what all did you incorporate that made a big difference for you? I'm intrigued to know. Was there any aha light bulb moments you had? Let me refresh this delta here on the DOM and recenter for you, Pikey boy. See what's happening. Let's clear as well. Okay, so I would like to see these 72s hold, which is pretty much the overnight high. Good. Good sign. Now bid pull please, and just get your way back down into the range. Okay, good. Offer absorbed 102. Come on, continually hit please. No bueno. We'll zoom in here a little bit and make the delta that little bit bigger. You can see how the delta that's coming in is, you know, really nothing, yet the market is going up, which basically tells you that just these orders get pulled each way with no real size coming in. So ideally you just want this bid to evaporate, and of course these orders you're seeing here, by the way, are not real. This is the cloud algo that's continuously there. The cloud. Okay. We ideally want to see this break here. This is not fantastic. A little bit of 2A going on. Yeah. We need to see sellers break 69 a quarter here. Until then, we're kind of, you know, we've seen a bit of absorption, so I'm just going to draw this out. So absorption here, absorption. So we're kind of sweeping. We've swept in between here, absorbed here, and absorbed here. We've now swept below. We want to see this really 69 a quarter. If price goes back in, we want to see the offer hold, and then continually hit into the bid. Trying. Struggle to break here. Okay, let's see if this can hold. Are you guys in any other positions? Is it just you, Pikey boy? Is anyone else? Any open orders? What all's happening? Okay, so sellers are hitting back here. Couldn't say anything major, but they're trying. The volume is there at least. The buyers are, you know, still there. Okay, you don't want to see 72s break, you want to see them still defend here. If they do break here, there'll be a little mini pop, you should think. So you're combining PD raise with volume profile to get an idea of where price might go and reverse, and get confirmation from delta divergence at specific times when volatility is expected. Very nice. Very nice. What is a PD ray? Is that just a price? Ah, I know what it is. Price displacement, isn't it? What does that mean? Does that just mean a break of structure or something? Break of structure volume profile to get an idea of where price might go. Okay. See a little bit of selling come in. See how this goes, mate. We need to see this, you know, range reclaim. POC has moved up here as we discussed earlier. Right. What's the difference between an order block and a fair value gap? Okay, this is looking good, Pikey boy. Need to hit this. We need to see this capitulate here to get you back into the value. Let me quickly see here what happened in Treasuries. Did this break or anything? Or did we? Yeah, we have, haven't we? Wow. Yep. And that is why you do not go for the continuation at this time. Just jams it back in your face, like so. Take the low, offside 2 ticks. Thanks, Rob. Hope you're feeling better, dude. Hopefully you have a good weekend, my man. And you're right as rain on Monday. Oh, James. Oh, you didn't hit the low, did you? Were you short from up here or something? Did you know? Make a vote. I would take 1k if you get it, mate, on the table, because balanced day you're not going to get any real movement. If you get 1k, take it. End of week, nice. Where are you short from, James, on the tens? Um, there's been a lot of selling in this candle, in this 10 tick bar. Yeah, I mean the short's not looking great. We've now got the 30-year pretty much back to the middle of the range. The 5-year is working its way up as well. The tens, basically, if they lift this offer uh, back up and we get to 31s, then that's pretty much it. To be honest, let's see how they do it. You really need them. You really need them to try and take 30s here, but most likely they're just going to finish around here. All losses. You got in at 23s. Wait, what? Oh, sorry, twos. Okay. So you're in from here. The volume point of control here. Oh, that's a good short, mate. How long have you been holding that? Have you been holding that like all day? So here's your short from here. You must have been holding that, mate, for hours, right? Yeah, I thought so. Good short, mind you. Like, I mean, you really must have been holding this for time, like 3 hours, roughly, since noon. Wow. Wait, what time's that? This is 3. Yes, I'm right. Yes, about 3 hours. Yeah. Wow. Well done, mate, and be able to hold it that long. To be honest, well done. Personally, if you're short from there, uh, if they don't take this out, like you want to see them clear this and then reload the offer, and you need to see the 30-year take this as well for us to be any form of extension down. But if you're short a couple, I don't know, maybe scale some or something. Set it and forget it. Yeah, quite right, man. Quite right, dude. Yeah, this is like watching paint dry. Uh, okay, we need to see some selling come in here for you, Pikey boy. Let's refresh this delta because it's wonky. See what's happening right now. What target do you need to get to, Pike, for some Profeto? Here you go. Oh, nice. Okay, see if you can get it down to like previous day high, like here. don't know how much that move is, but like maybe here would be a nice move. If you're in profit already, this should be quite a good move down to there. So you want to see the offer hold strong, tiny little bit of buying come in, but you want to see the offer hold strong here. Nice, mate. Hopefully you're enjoying it, dude. Completely different styles, to be honest. Norden's is completely different to mine, so good contrast. Yeah, what do you think? What do you mean to the upside, James? Yeah, I mean, if we reclaim here, if we reclaim this, then there's going to be tons of short liquidations, to be honest. I can just extend this. Tons of short liquidations above here, which are not too far away from. But then we need to break this high volume node, so there's probably going to be chop around here. So yeah, we'll see. I wonder if some key data points come out that basically makes the market go bid. No problem, Patachi. What video were you watching? Alex, I was wondering if you spent any time analyzing raw order flow data using Python or similar to understand how order sizes, lifetime book structure, etc. change over time. Very good question. No. No, but if you have the facility to analyze that on Python, that would be great. What would be extremely interesting, to be honest with you, is how to explain this. The ghost algo that you're seeing, right here, this is showed up in the last couple of weeks, maybe about a month now, here and here, right? This is not real. It just follows price. Now, a large firm has put this in place, probably a market making firm has put this in place to distort the book. And what would be really interesting would be to check the pulling and stacking, just different patterns around price since this has been implemented, because the only reason this has been put in, very simply, is to distort the book. That's its sole purpose, you know. Nice. Good. Hopefully you liked them, mate. Okay, we want to see there's some a bit selling coming in here. Want to see it continue aggressively. The volume's now coming in. We've got market on close coming in directly. This is now your time. If this is the dump here, this is your time. Need to see this level break here. 64.5 needs to go. You can see some selling coming in, but they need to crack this level. You can see a couple hundred contracts absorbed into the bid, and the offer's pulled. This is complete barcode at the moment. Okay, second attempt. Let's see if they can hit it. Okay, you've got 10 minutes of volume to come in. You really need to take out this 64.5. I think the target should be 60s. Yeah, so down here 60s if you can get that. It's not that far away, mate, to be honest, but okay, see if this can go now. You want to flush through here. Just not getting it this time. Lemon, good question. Okay, so you see all of this selling here, 241, 202, so this should be going. The bid is basically absorbing all the selling here, right? The sellers are aggressively hitting in. This needs to go. It should say a flush through like this. This is great for Pike. But you need to see now the offer hold. And what I mean by pulling is not many contracts need to trade. So let me do this. So you notice the offer is pulled, it will jump up 5-6 ticks and only like maybe 60-70 contracts will trade as an example. But this is good, it's selling off. Target of 60 is just coming to fill out the 60 here. Okay, so the offer is still looking strong here. Here we go. Fill it at 16,100 down here, 59 a quarter. Tons of absorption down here again. I think they'd want to go down here and fill these levels out down here. Another one stacked. Both pretty important, mate. They're just imbalances that come in the market and it needs to quickly rebalance. Look at the amount of selling that's coming in here. Lots of selling that's going to be corrected in the next 4 minutes. Jeez. This is a fantastic example of absorption. Look at all of this selling, yet the market is going up. You know, it doesn't really get any more clear cut than this. It's completely red, yet the market is going up. You're seeing, look at all of this negative delta. It's literally off the screen here. So what you'll probably find is the guys that are shorting it here is actually their bids that have held it up. They really need to hold this because all this selling that's happened in the next 3 minutes, if they do bang this, all this selling down here needs to puke and then it goes up more. So sellers need to hold here. $48. 48.75. Did you mean 68.75? Okay, 2 minutes till we see algo time come in. This is not looking great for shorts at the minute. Let's see how they do it with all this selling coming in. If they decide to bang this here, they'll need to liquidate. Okay, so a lot more buying has just come in. Above this level here, there's going to be a puke of all these sellers if they hit this. A little bit of an iceberg. Let's see if they can hit it through. So you can see so much absorption up here. See if you can take this through with some size. 1,000 absorbed in the offer. Needs to hold above 73 3/4. It is at the moment. This looks even like an well, I was going to say a pretty calm Market on close. Never really is calm, is it? Cheers, Davey boy. Have a good weekend, dude. Don't do anything I wouldn't do, mate. Okay, I want to see very quickly. This is pretty much all she wrote here. Just want to see what happened in Treasuries ever so quickly. Yes, snapbackaroo. Yeah. What a shocking day in Treasuries. Just murder. Yes, Steve. I knew you were going to say that, mate. So, Pike, how did that go, mate? Did you manage to take some Profeto? Lumen, did that make sense regarding the bids and offers and stuff being pulled? Does that make sense? How you can spot that? You've basically got now to explain this. If you see like not a lot of delta coming in, you know, which is positive buying, yeah, the market is moving too much for that, and you just get a gauge over time. You know, when the offer has been pulled, for example, you know, if the market is up 20 ticks, you know, say like this, right? When you look at this here, there's literally no buying or selling coming in. I'll get this here if you can see this. So you can see here, right? There is literally no buying and selling, really, right? It's completely flat. Yet the market is doing, you know, this. We hit highs, we hit lows, we faffed around in this range. Do you know what I mean? So the market to do this moved by not really any buying strength, just these orders here disappeared, you know? So what I mean by that is someone bought into this, right? But you can see that it's refreshing. Someone hit like 50 contracts and then these, you know, three prices just cancelled their offers and you're up 3 ticks. So that's what I mean. That's what I mean by the offers being pulled. Well, mate, we could. The POC's just changed up here. We could potentially grind down back here, but kind of clutching at straws a little bit now. I think this area here was the target. So let me know if you guys have got any other questions. Anyone that's not said hello and you're still watching, say hello, let yourself be known. Hey Alex, how's it going, dude? How's your day gone? Do you take any trades today? Hey Valentino, nice of you to say hi, dude. Yeah, been a long week this one, to be honest. Glad this one's over in the books. ARP, nice of you to say hello, dude. Currently going through the OrderFlow series videos and learning a lot. Nice one, mate. Good. Well, if you've got any questions about the specific videos, leave a comment on them and I'll make sure and get back to you. I read all the comments. It's actually the easiest way to see it because Discord is wild. I get tons of messages on there, so it's hard to see everything all the time. Nice. What video are you on, RP, and which ones? I think there's hours of content on it. To be honest, I actually need to revise it and maybe put them in a specific order. I think there was some method to my madness at some point with putting them in a specific order, but I need to double check that. I think actually what I'm going to do a video tomorrow. I think I might do one about the footprint, to be honest. I don't, I'm typically a DOM trader. Footprint is really only good to spot imbalances and stuff. Um, I think footprint works better to the left of the chart, and it allows you to probably analyze the raw delta and stuff a little bit more. It just depends how you prefer things. I think my brain prefers to look at delta and candles rather than numbers, if I'm honest with you. But we'll run through that video. I'll work on that tomorrow. Valentino, that's going to happen, mate. This is really different. Patachi, sorry, what do you mean by temps? Um, Completely different market conditions. Are you trading ES, Valentino? You're on the second absorption video. And what markets you planning on trading, RP? Are you trading indices, or what's your weapon of choice in terms of products? You're trading ES. Well, to be fair, mate, this week is really difficult action. To be honest with you, dude, so I wouldn't feel too off about it. It's hard to read the DOM, man, when it's 50 bid. It's really thin. So you have the correlations in place as well. Nice one, man. Yeah, that's really important. I would probably advocate. I do it for the stream where I take away the inside prints, but I'd probably advise you to have the inside prints in there while you're learning. To be honest, And that this is the inside prints, these parts. And it goes without saying, just so we're all on the same page here, the left is selling. So when you sell, you're hitting into the bid, not to be confused by layering a bid. I think that can be quite confusing for some people. So when I say I'm hitting into the bid, I'm selling. When I say I'm lifting into the offer, I'm buying. But when I would say, right, the offer has been pulled, it's here. The bid is getting pulled here. But when you're lifting into the offer, you're buying or hitting the bid. Does that make sense? And at any time the bid is or selling happens and the bid has been hit into, the red is happening here. And any time the offer has been lifted into and buying happens, the blue column aggregates. Okay, and price moves diagonally as well. That's another thing, just in case we're not on the same page. You've got the price here. In fact, let me do this quite quickly. Bear with me a little second. So, right. Okay, so you guys can see this, right? So, because it's easier to explain this when it's when it's stopping. Okay, so we have, that's too big a circle. Bear with me. Sometimes I think it's quite good to break this down to its common thread. Okay, so you have price here. Okay, let me make this pink so you can see it. That's just too big a circle, isn't it? It doesn't really matter. Okay, so price is here. Price is currently trading here, right? Now, currently the market has gone bid, which means it's taken out this price, okay, and it's then reloading the offer. In order for sellers to tick down to the next price down here, okay, this is annoying me that this is, let's make it much smaller, sorry. In order for this price to tick down to here, they need to take out this full 45, okay? And in the same time, if any buyers come in and they want to buy, they're lifting in to this 47. So it's hard to see this in real time because it moves really quickly. But when you're buying here, say you went in with 2 lots, this would become 45. So 47 minus 2, 45 remaining, right? However, when we say the offer can be pulled, what will happen here is, say maybe 10 contracts will trade in here with size, okay? So they'll hit in, which would take it down to 37, but then the other 37 contracts will just cancel. So they'll cancel off, right? And then the market would then tick up. So it would then, this yellow bit would then move up to here. And then you'd want to see the bid reload, right? So then it goes bid. And what I mean by that is they're saying, okay, I've taken this next price, what have you got for me? And layering it here, right? The same goes here. If sellers want to take this, they need to take the 45, but they can only trade maybe 10 in here and the other 35 can be cancelled. Then they want to see this reload and then they tick in again. This happens in super quick speed and you've got algorithms pulling and cancelling all the time. So you need to see this over a number of ticks in ES now because it's really thin, which is why you need to use the likes of delta, because it gives you a picture on, is price going up with the actual size that's coming in, or is there not that much buying coming in but just orders have been cancelled, right? And very, very typically, if the market's going up but orders been cancelled, it means the offer or the sellers are weak, typically, in a normal environment. Um, so has anyone got any questions about that? I thought I'd break this down into the most common form. Use the pulling stacking columns in your DOMs. Yeah, exactly. I would say, Maku, do you use Sierra or do you use Jigsaw for your DOM? Now, have you noticed that the pulling and stacking is a little bit off, especially on the current price? I don't know if you've noticed that. It's fine in other ones, but on the current price, it's a little bit off. I need to check what the logic is with that, but you know what the coding logic is behind it. RP started with treasuries. We've tried ES last couple of weeks. I think it will go back to treasuries. I find it more pace, larger size, and one tick moves. Yeah, exactly. Yeah, Alex, good question, mate. So pretty much delta is the difference between market order buys and market order sells. So a positive number for the delta just equates to um, more buyers at market than sellers, and a negative number is more selling market orders than buying, if that makes sense. It's actually, I think it's very much just difference of ask volume minus bid volume is literally the delta calculation. And you have two participants in the market, right? And this is where you need a DOM to realize this, because the market can, you know, move and stop in two ways, or you've got two market participants. You've got passive buyers and sellers, right? Which are these guys. This is someone passively buying on the limit at 66.5 at 101. This is someone passively waiting to sell on the offer at 70s, right? If no market orders come in, the market would never move. So market making firms need to create movement to make money and for the markets to move. You know, and you've got tons of different participants. You're never going to know why the market moves, it just does. Um, but you've got two main orders that happen. You've got the passive side and the aggressive side. The aggressive side basically saying, I want to sell right now or buy right now, and they take the next price at the offer, or they take the next price at the bid. And your job as a trader is to first analyze who is in control. Is it the aggressive side, or is it the limit side, the passive side? And you maybe think about how do you know that? Well, very simply, delta should be following price. So if you see a lot of buying coming into the market, right, the price should very simply be mirroring that. So if you see, a green candle here, a green candle here, for example, and that maybe accounts to like 3,000 positive delta, the market should be going up the way, right? If this happens, we've got a green candle and a green candle, and the market is doing this, right, where it's not doing anything, okay, then it means that the offer has stepped up and then absorbed that buying. So these guys, the passive guys, have basically said, right, I don't really care about all your buying because I'm here to stop you. You know, the red team is got enough in the passive side to stop the aggressive buying from moving. And then how do you then implement that into the next stage? You're probably thinking, that's cool and all, but how does that provide you an edge? And how does that even come into strategy? Okay, so when you know this, you then need to use pressure points, volume profile steps, okay, and areas where these guys that have just bought, okay, who aggressively bought into the market, where are they going to be under pressure? Where are they going to have to liquidate? And in the same side is these guys that have absorbed on the offer, whereabouts are they going to have to puke, okay, and get out of their position? And very simply, you will notice that very, very simply it will be the next sort of mini sweep point, or a high of day, or a low of day, for example, or a next area. Doesn't need to be as far away as that. I'm just using that as an example. And very typically, when you have a step in the profile, if you watch the volume profile and pressure points videos, explains that. If you see tons of absorption, just at the low of a pressure point, right, like this example, and then you see sellers starting to come in and hit into the bid, the guys that bought will have to start liquidating, and selling in. And what happens when you become when you're a buyer and you need to liquidate? Well, you become a seller, a market order. You then become a seller where you're actually hitting into the bid yourself to get out of the market. And that's where, when the market takes stops, it tends to blow through areas. So just, does that make sense as to what I'm saying here? So Maku, when you're in a trade and I'm seeing the pulling happening in my direction and they're adding or reloading on the opposite side, stay with trade. Yeah, exactly, mate. Exactly. Aren't there different order types like... So what do you mean by different order types? Do you mean like icebergs and so on and so forth? So Alex, when people are manipulating and pushing the market in a specific direction, do you tend to see the order pulling, cancelling more, or brute force, or more fills, or both? Great question. That's a really good question, mate. So, how do I explain that? When you get the big moves, right, like the market will, flush through a level. I'm trying to use an example here. We'll just use this one here, right? So, for a really big bid move or a really big sell-off move, you're going to need both, right? Where you're going to have stops being triggered, the bid is pulled, and fresh selling coming in. It's like a frenzy, like that all happens at once, right? So you have the buyers that are liquidating, they become sellers. You have fresh shorts coming in at the same time as well, and you have the bid being pulled at the same time, and then it's just a flush. When that happens, typically in indices, you're going to see it on NQ, Russell and the Dow. You want to see them going down at the same times, if that makes sense. Very often in extended trading hours in Globex, you're not really going to see the brute force moves. You're going to see more offers been pulled, bids been pulled, and the market sort of just grinding its way with not a ton of buying or selling pressure to get to I'll call it a sweet point or an inflection point where they can basically get out of their trades, work the other side of the book, and then whip it back into value, distribute a little bit more, and then do the same. That's pretty much what happens in Globex. I would say a very large percentage of the time. The move that you saw this week, I think it was on Tuesday or Wednesday, which just went straight bid, the whole of Globex, that's more of a red herring. A lot of the time, you see the market will have it might have quite a big range, but it's just going from, sort of swing point high to swing point low. You notice how much the times it'll sweep and sort of mean revert. different context. So hopefully that makes sense, mate. I don't want to really confuse things, but um, you need to have a really deep understanding of this book here, which you guys will get over time. You just need to spend the time doing it and sort of put into practice what I'm saying here. Um, this is literally the market in its truest form, right? It's what all the large participants are going to be utilizing. Because why are they using that? Because they've got thousands and thousands of contracts to execute. They do not really care about um, you know, just a MACD, or if the price is overbought and an RSI. They just don't care about that. Why? Because they need to get thousands of contracts filled, right? They need to know what size is on certain prices, where has size been carried out for that day or the week, which is likely going to continue, so they can get some size off. Now, when they get the size off, 95% of trades in the same day are closed that day, right? You're probably talking something like, I don't know, maybe it's like 7 to 7. I would say no more than 7% of trades are kept for open interest, right? So we'll just round it to 95. So 5% of trades all time are closed before close of play, right? So back to what I was saying there. If you get filled at 20,000 contracts and you need to close out those trades, well, if you're spending 20,000 contracts and you've been working, say you've been buying those 20,000 contracts, you're going to do that probably over in a slower day. You're going to be doing that over probably an hour, just working the bid, right? Maybe price will drop down a little bit. You'll buy some. You'll maybe buy some into the offer. If there's some liquidity in the offer, you'll bang it. You'll kind of distribute, right? And then price will then take its way up. But you now have an average of net long from a certain price. When the market's thin like that, you can spend a couple hundred contracts to bang it up another few ticks. Do you know what I mean? Because you're already net long thousands of contracts from below. So what's another couple hundred contracts to bang it up another few ticks in profit, right? But then you need to close out those positions. So you need to take it to an area where people are going to give you liquidity on the offer so that you can start getting out of those positions, right? And you need to, that's why the market goes to, typically it sweeps areas and it goes to points of controls and it does all these sort of things, because that's areas where they can get some positions off so they can basically start liquidating their book, hopefully for a profit that day. One of the short hit the stop, but the others went back to break even. One day I'll be riding by a Bugatti and you guys be waiting for the bus. Yeah, exactly. Yep. I don't know, it might grind its way down if you're still in, dude. So hopefully that makes sense, guys. I'm making sense of what I'm saying here. It takes a long time to get to grips with this. Exactly, and I would say more often than not these days, um, well, saying that Treasuries is different, but ES, when there's an iceberg, um, what you'll see, for example, say, I'm just using this as an example. Say they've traded 6 in here, right? So you can see that they've traded 6 in here. Okay. Next thing you know, there's 100 traded in here, but there's only 45, right? So this is just what the definition of an iceberg is. So you trade 6 in, next thing you know, sellers have like, okay, I want to crack it, so they hit 100 in, but actually this is absorbed. So 100 will show here, but there's only 45. And what an iceberg order is, very simply, is it will be something along the lines of, right, only show 45 contracts. When the 45 contracts gets taken, reload up to X amount 100, for example, right? So they'll continually reload that price until the whatever amount of contracts are done. It's just a specific order type, you know. And it's, you can do it on the likes of TT. It'll all be done via APIs and whatnot these days. But the point I was raising this is, just because someone is stepping up with hundreds of contracts absorbing doesn't mean that the market's just going to go up. Very, very frequently, when the market takes the iceberg order, and there's some size to take through it, so if they hit into it, the market will instantly go through it, and you'll see like a sort of dump through it, like 5-6 ticks. That happens a lot on ES. So my sort of idea is, yes, if you're grinding lower, again, and you're getting to a pressure point, and a buyer is like, nah, I'm going to try and hold this here, see if I can bump it back up because I might be offside, I can hold it. Sellers will get exhausted, and then we can take it back in, we can pull it back in, right? But sellers get aggressive and they bang through it, and then you just see a capitulation through, and you'll probably see some long liquidations in that example as well. Hopefully that makes sense. $500 is, yeah. $500 is not too bad, mate. And that's pretty much it. Trying to think, I can't really explain it any simpler than that, but it takes a long time to be able to just quickly check delta. You then instantly know, right, who's in control at the moment, limit or market. If it's not apparent, then you need to look into it. Where are these people going to puke? What kind of data type are you in? Is there any data that's going to come out to change the sentiment? How is the volume for the day? All these things like go in for you to make the best educated guess on the session. Yeah, I think enough of the pen there. You can see these guys here. I think the algo's potentially been turned off, is it? Yeah, see that? Just straight after the regular trading hours is basically closed, the ghost algo disappears. They have turned off the machine, closed off the servers for the session. Have you seen the ghost out? No, Alex, it literally never gets filled. It's just there to distort the book. It must be doing a good job for the firm that's ever running it, Otherwise, it wouldn't be there. Yeah, the thing moves that quick. So since the volatility increased this week, I think it increased by a number of ticks as well. And it's on of course the bid and offer, and it's just simply there to throw off the what would we call it? Just the sort of pooling and stacking levels on the book with different algorithms. Well, we're calling it the Ghost or Cloud Algo. If you guys want to rewind the stream, you'd see. I think it was maybe something like 12 or 15 ticks away, but there's like a hundred, like 100 lot, a 150 lot, 100 lot, and maybe 15 ticks away on the offer, and then it's like 15 ticks away on the bid. Um, and any time price goes up or down, it moves up and down with it away from price. It never gets filled. Um, and the only reason it can be there is simply to distort the book. That's all. Miranda, when you've been doing this for so many years, and you've been watching this for so many years, and you've got a finance background, um, you just learn, you know. You just learn, dude. That's why this is a you go to college or university for 3 4 years to learn any profession. Trading should be no different. It's a complete you know it's a really complicated industry, and that's why some of the videos I've released is to try and get people a little bit more accustomed to what goes on behind the scenes, um, how the market ebbs and flows. Because to be perfectly honest with you, there's so much nonsense on YouTube, um, that retail will probably lose 2 to 3 years of faffing around just looking at stuff on YouTube, to be honest, or following different strategies. And the concept of it here was to try and get you to realize what trading's really like and the competition you're up against, and whether that be how they route orders, how they layer the book, loads of different things, trying to get you the sort of complete picture. Alex, so I stream in the PM session. I try to stream every day, but to be honest with you, it depends on the action. Um, I like to come on when the action is relatively good and we've got good talking points to discuss. I trade Treasuries. I don't stream that. I run over it in the stream, just to discuss. But Treasuries is it's not the it's not a very entertaining market, you know. So I stream ES and indices because it's moving and it's just better talking points. And I do that from 2 p.m. New York time, typically about half 1 to 2 p.m. I finish trading for the day about 1 p.m. and then I stream from there, and I typically do that Monday to Friday. It just depends. Well, it depends on the action, because the last thing we want to do is come in here and watch absolute barcode, right? But I suppose it's a good point for people to ask questions and stuff, and I like hanging out with everyone, so um, it's good. It's good to get like-minded OrderFlow peeps and people with open minds willing to learn and stuff. So Lumen, hopefully that made sense, dude, about the ghost algo. What would be really interesting is, it's a clear spoof, right? It's never meant to be filled, but it never leaves. Like, it's always there when they turn it on, and it's a certain amount of ticks away from price all the time. And I think I think they've definitely checked the rules. Because spoofing happens, right? Um, and these big firms get away with it because they're doing so much size that when they spoof it and they bang it up on our 3-4 ticks by just faking the orders, allows them to get better fills for their existing open positions. Because they're doing that much size, it's a grey area. How many orders do you cancel a day and pull? Probably quite a lot. So you can't really pull them up on it. And plus as well, if you watch that video there, you know, that I put out about what really happens behind the scenes in futures, the exchanges are meant to referee, but are you going to go to one of your best clients and tell them to wind their neck in if they're, bringing you like 80% of your revenue? You know, you're going to probably look out for them, aren't you? No problem, Alex. Glad you enjoyed it, dude. Thanks, Lumen. Have a good weekend, dude. What is my favourite setup and why? Good question. Um, okay, ES, I do not like breakouts. I tend to find that ES snaps back. Breakouts are quite a lot of risk on ES. Um, you'll hit it, for example, and you need to puke it really quickly if it doesn't go. And in the times that it goes, it normally will snap back and retest the area. Like, it doesn't just go, you know. Um, so I'm not a fan of breakouts on ES. I prefer sweeps on ES where that is same example. I mean, let me bring this up. This happened quite a lot this week, but this is a classic. So overnight high. So give you a bit of context for the session. Friday, low volume, no news on the calendar. Okay, gap up here. We know that buyers would absolutely love it to reclaim up this level. Sellers are probably not going to allow that to happen on a Friday. No data, low volume, right? So that's your context going into the session. So you're really going to be looking for sweeps of overnight high, sweeps of overnight low, sweeps of previous day high, that type of idea. So the market opens, does all this stuff. We then go absolutely straight bid, right? Moon into the previous day high and the overnight high. We sweep it. Your stop basically goes above that, and then you're riding it back into next inflection point. That's the trade for the day. Very simply. Now, if you check this happens a lot, right? This happens a lot of the time, this type of behavior. And it happens in the overnight session where we did it here. You know, we then swept the previous day high here. We then go down, we sweep this level that was put in an overnight high, and then look, we open the session pretty much where we started. This is basically Globex in a nutshell. If you go back to the previous day, okay, I'm just going randomly here. We do a sweep here, we then go back up, we then pull back in, you know, and we just continuously sweep around is the area where you have these levels, and that's all Globex is. There's no real session. Yesterday, the market was waiting for the job numbers, which caused the continuous bid for the session, of course. You know, it happens extremely frequently where it puts in a high, then the market goes up, we then sweep back down. You know, it's continuous behavior, it does. So that's my favorite sort of setup that happens in ES. Does it happen every day? No. Does it go a certain amount of ticks past every time? No. Um, so that's what I prefer in ES, these types of setups, okay, with specific context, depends on the news, sentiment, all that kind of stuff, right? On the flip side, when it comes to treasuries, I prefer to take breakouts. I prefer the market is in a sort of tighter range, there's volume coming in, you know, we've got correlations working, so say I'm trading the 10-year, the 5 and the 30-year is approaching the highs. You know, I see there's a pressure point at the high as well, where this could be stops could be triggered. The market's working its way up there. I already want to be in that move for anticipating that the market is going to break the high, and then when the market goes in treasuries, it typically goes. You know, when the volume is good, it will go, you know, 6-7 ticks or something above the high, and that's your session done. You know, if you're getting like a trade where you're getting something like 6 to 10 ticks in treasuries, and you're hitting like 10 contracts, happy days. So that's the sort of general setup. It really depends. It really depends on the market, and that's why you cannot just take the same setup and go to any market and trade it. You need to trade one that suits you. You need to trade one that suits your personality. Um, you know, if you trade treasuries and you find it like literal paint drying, then don't trade that. You know, it just depends. You need to spend time. So hopefully that makes sense. Um, and the market profile or TPO charts is just a nicer way to look at the market, in my opinion. It's rather than the sort of advertisement that price gives, it just allows you to see this is Monday's regular trading hours, Tuesday, Wednesday, Thursday. This is combined Globex and the regular trading hours for the current day. So just allows you to see what's happening. And as you can see, the market loves to sweep these levels. Again, you can see that very clearly. The market sweeps down here, then we go bid. Market sweeps up here again, we then pull back. You know, and another great concept as well is when the market leaves a gap from an overnight session, it will normally be filled in the next couple of sessions, just as a general rule. So these are actually a couple of good rules. Overnight session gap will normally be filled in the next couple of sessions. Okay, preferably the same day. You can go and check this on your charts. And then I can't remember exactly what the other main point was I was just going to say. Brain fart. What are our settings for the RTH and market profile? What are your hour settings? So you need to set this to your own time, dude. So whatever time zone you're in, make sure it's respective to that, and it's 30 minutes. It's 30 minutes. So a day each profile is a day, and it's a regular trading hour session. So for me, it's like 9:30 to 5 o'clock, New York time. Oh yeah, that was the other thing I was going to say. So the market likes to repair single prints, and typically the first time the market will go through singles, right? Typically, it will blast through them. It's a great trade. Um, and it's good when the market leaves quite a lot of singles. So like here, for example, right? This is left single prints here and a gap, okay, for regular trading hours. So when the market gets up to, let's draw this. When the market gets up to this area, this is why I was saying that they weren't going to crack this. They weren't going to crack this today. It's just too much for Friday. No news. So this is like the last layer of defense, which you can see literally they hit it by a couple of ticks, right? And when the market goes through these levels, it will tend to blow right through them very quickly. And then it gets to the imbalance area. So you'll find that in order to create these singles, there had to have been a lot of selling come in. So very typically, you'll find if you look at a footprint or anything, there'll be aggressive amount of selling in here that basically creates a sell imbalance to create this single, and the market will typically break through the singles, and basically profits will be taken at the imbalance. Then you'll normally find something to the tune of the market will then pull back, and then basically uh, the market will then pull back, and then it likes to fill out the singles. So do something like this, and then it can basically pull back, and then just do whatever from there. But that's typically the flow. The first time you're going through singles, and if you're anticipating that the market is going in that direction, and you've got some correlations in your favor, it's a really good trade because it tends to go. I know in Treasuries it does anyway, but yeah, I still do the same for that. Hopefully that makes sense, guys. Let me know if you get any questions. I will look to call it if you're not getting any questions. No problem, Alex. No problemo, dude. Okay, guys. I hope you all have a great weekend. I think I'll do something about footprint tomorrow for everyone, um, which should be good. And we'll catch up early next week. Hope everyone has a great weekend. Peace, everyone.